Intelligence who joins in on the show. We also have Payal Shah.
Ah!
Thank you so much for taking the time out.
Hello.
Arun,
There's
been a massive dip in the number of deals as well as investments. It seems like the year hasn't really begun on a fairly good note for the startup ecosystem. Do you think that this is some sort of a trend that could likely persist for the year ahead, or that we could, potentially see things pick up along the way?
Yes, indeed. This first 3 months of 2018 has not really been a very brisk one. We've tracked around 76 classic venture capital investments only, worth about $257 million. Unfortunately, this is a multi-quarter, low. I think the previous low of these levels we saw only in 2014, and these numbers are around 30% lower than what we saw in the same period last year, and 23% lower than just the immediate previous quarter. Unfortunately, the trend has actually been only on the decline, ever since the last quarter of 2016, and we really don't see a reason why things would turn around, especially because the crunch is really felt in the Series A and Series B, kind of funding, and those choke points from our, kind of interaction with the VC community, at least, doesn't seem like going away, anytime soon.
Payal, let's get a perspective from you, because the big takeaway, as we've been talking about, is that there has been quite a bit of a dip. What's the reason that you would attribute this to?
So, generally speaking, the investment pace has definitely come down compared to 2014-15, for instance. I think the big thing we are seeing is that later stage investors have become more cautious. They are looking for some very specific things in startups. They're taking much longer doing their due diligence. All of this is attributing to the fact that they are looking for startups who are operating in large markets, which can give them very large outcomes. So even if a startup is perceived to be in a small market, I think VCs want to stay away from those. They're looking for startups in much larger markets.
So, Arun, give us some color on investments by cities. Do you think that the regions of Delhi, Bangalore, in the NCR region, that continues to remain the favorite for VCs? And how are they faring in comparison to some of the smaller cities?
Sure. I think, we need to look at it as an intersection of, sectors as well as cities. So, for example, Bangalore and Gurgaon, which have kind of suffered the most, the latest quarter at least, are really the capital of B2C consumer startups, right? So, they are the darlings in terms of venture investors when they are looking for, very aggressive startups in the B2C segment. Now, really, this quarter, very, very uniquely, 60% of the investments have gone into B2B companies, and within that, something like 28% of the, investments have gone into just enterprise software companies. So this is something that, cities like Chennai, Pune, Hyderabad also, contribute to, especially Chennai, given that, it has quite a few SaaS startups. ChargeBee, for example, raised a, very strong $18 million round this quarter. So, we are really seeing that mix really impact of, consumer technology companies, getting less attention, and that is where, Bangalore and, even more so NCR, Delhi is losing out at this point.
Now, Payal, Elixir has emerged as one of the most active VCs in the last quarter. You've seen quite a few big investments coming in. Is this the normal pace of deals for you, or is it far more brisk, given the fact that we're talking about it having slowed down in 2018?
No, so this has always been the pace at which we've operated. We run a seed program which invests between 2 to 3 crore in startups, and we run an accelerator, which is a non-funding program, but we invest in the startups when they graduate. We want to do about 5 investments of the first category every year, and 7 to 8 of the startups which graduate from our program. So together that's about 12, 13, and if we include follow-ups and portfolio companies, with that amounts to about 4, 5 a quarter.
Okay, generally at a fairly hectic pace, but Let's talk about the funding rounds as well. That's a little bit disconcerting. The early stage does seem to be robust, but then the follow-up funding for most companies seems to be rather difficult to raise. Is that some sort of a systemic issue that you've noticed in your past experience? Is that a problem that's cropping up now? How can one really look to address it?
It's true that follow-on investing has dipped a bit, but what is also happening is that many startups are seeing existing investors continue to support their startups for longer until they reach the metrics that later stage investors are looking for. So I think that many more will start getting ready and have the metrics that VCs in Series A and B are looking for. I also think that there is a little bit of a lag effect. VCs have become very active in 2018. And we'll start seeing those numbers coming up in the next quarter or so. Many of them are looking to raise much larger rounds of their own. They're looking to raise bigger funds and top up their funds in the second half. And so we feel like there will be a little bit pressure on their part as well to deploy some capital over the next couple of quarters. Good companies with interesting products in large markets will get funded, either by their existing investors or by VCs.
Arun, would you tend to agree with that, in terms of what the root issue is when it comes to follow-up funding, that when you have a robust company or a robust business in place, that it will come through?
Definitely, that is something that I would completely agree with. One on, there is definitely a lot of money in the system for the right company, no question on that. As we in the industry calls it dry powder, money raised but not yet invested is historical high at this point. So definitely, once the VCs put their existing, especially the B2C companies, house in order, there's no reason why they would not deploy it. And we are clearly seeing signs of that happening in the Series C, Series D. Like I said, the real challenge has been in the Series A, Series B. Hopefully, with some of the exits, also starting to happen, some of those older investors would come back and deploy that capital again in at least the Series B, if not the Series A phase.
All right, and finally then, Arun, PayPal also indicated optimism on the next few months picking up. Do you echo this kind of a sentiment that larger VCs will now open their purse strings? Just to take it forward, what is your assessment of how 2018 would look the rest of the year?
Clearly, today the driver's seat, is the strategic investors, and we've seen that happen, whether it is SoftBank, whether it is Alibaba, or now Tencent, they're playing a key role in the ecosystem. And, very fortunately, like you mentioned, PayPal, we are seeing a return of the US-based strategic investors come. And, frankly, they are really setting the tone today, and I'm sure the financial VCs will have to follow, given the kind of optimism these strategics are displaying today. It's just a matter of time in terms of, some of the exits that they need to make happen. Once they take place, I'm sure, the financial VCs will return as well.
Okay, Payal, going ahead, what is the strategy for Elixir? What kind of pace of investments are we likely to see? What is it going to be, the kind of changes that we'll see in sectoral bets?
So broadly, our founders, Chris Gopalakrishnan and Shivalal from Infosys, we started Axelor about 3 years ago. The idea was to support startups in the early stage, and that's definitely not going to change. Many other funds, etc., go up and down in terms of the check sizes they write, sectors they like, but we will continue to be focused on the early stage. This is typically seed rounds and pre-Series A rounds. In terms of sector, some of our sectors are similar to VCs, so we would do consumer content, which has become very big, or we would also do B2B SaaS, enterprise SaaS, etc. But then we would take some contrarian bets like enterprise IoT as well, which others haven't. And we'll continue to look ground up if there are themes emerging that look really exciting, which may be contrary compared to other VCs, but we'll continue to back startups there as well.
Thank you so much, Payal, for joining in, as well as Arun, and giving us your views on the funding activity that we've seen in the year, as well as what the outlook is going forward. And with that, it's a wrap on the show. Thanks so much for watching.